do I need to drop the blind, or are you guys okay? Sorry. This is where it comes off in my hand, and it's going on as well. So, what I want to do was, before I move on, one of the things, I've been doing this, like I said, now for 7 years. I'm therefore probably one of the guys who, there's been a few of us, but has been doing this for the longest time, trying to go from zero. We've now raised 640 million sterling in equity. I like to say $1 billion just because it sounds better. 95% of this American money. We did not raise the money in the UK when we started. We had to go to America, which is an indictment on investment and growth and technology in the UK. But we've raised $1 billion. We'll raise another sizable chunk next year as well. And what my job is now is, to knock the boulders out of the way, because the business is working, and success is now assured in my view. It's now the delicate success is how well we do it. And people often ask me, what's the biggest issue? What's the biggest issue you face? And I only have one strategic issue. I've got lots of operational issues, of course, I'm a bank, but I have one strategic issue, and that's to make sure my culture truly stays different. That I don't just become a good rich bank, because if I become a good rich bank, I fail. This is about taking on John Lewis and service. This is about taking on Apple in how they're viewed as a brand. This is not about being a bank. This is about developing a brand that is valued for the next X years. That's what I'm trying to create here. And therefore what I need to do, though, to help that growth is to create a level playing field. Because, not through anybody being anti-competitive, but because of the way that the nature of the British banking industry has grown, it is not a level playing field. Things like when I want to launch, nobody would bank me. I actually used to be a chap called John Varley's bag carrier, and I had to ring John up to ask for help, because nobody would let us into the payment systems. Because at the time, this is 09, it's fair to say the world was in a little bit of flux. And I had to call in favours to actually get into the agents of banking. It is ridiculous that if you're trying to set a competitor to the big banks, you have to go cap in hand to ask the big banks to let you in. But that's what everybody has to do at the moment. Now that's got to not be a competitive landscape. If you're forcing all of the competition in the UK to go to the very people they should be competing with, you have a problem. So that's been changed now. The PSR's been set up, Hannah's forcing through, the bureaus are being built, and we'll go on to the first bureau in the middle of next year. So we'll be a direct member through the bureau membership that's been launched. That should have been done 6 years ago in my view. I've been fighting for that for a long time. My little crusades. So some of the other things I'm fighting on, and hopefully that makes sense though. You can't have a competition. It doesn't matter how good, Atom building brilliant technology, but they've got to go to RBS to get cash paid in and to send faster payments. Therefore, they're beholden to how good RBS's faster payments are. That's it. Lowest common denominator breaks a chain, and you're done. We've got to remove that. We've got to move to a model that allows banks to be truly competitive in the UK, which needs infrastructural change in thinking and regulation in the UK. So capital requirements is the first. This customers here, I have to hold 35% capital weighting for those customers. If I'm one of the big banks, on average, I have to hold 3.3. Because there's something called the standardised approach and the advanced approach. You are not allowed to move from the standardised approach to the advanced approach for 7 years of static data. I'm growing at 100% a year. I'm never going to have static data for 7 years. Therefore, I can never move off the standardised approach. But my average LTV is 61% on my mortgage lending. My average debt to value is 54%. That is not high risk. Yet I have to hold 35% capital. Mark will appreciate and empathise, I'm sure. Nationwide, RBS, HSBC, Lloyds, Barclays, the average is 3.3, the lowest is 2.8. Therefore, they can lend. I have to let 10, 11 more people than I can. For every one customer I can lend to, they can lend to 11 for the same capital holding. So capital is my resource, as you know. Can you imagine any other industry where you would have a playing field where the large incumbents can do maybe 11 times more revenue off £1 of stock? Now, the issue is here. My number is too high. and theirs is too low. We both should move somewhere towards the middle, in my humble opinion, and I am being a quite loud advocate of that. You may have read the FT yesterday. But that's my job now, I'm afraid, is to create that level playing field. And I hope this isn't arrogant, but I see myself almost as like the big brother of a lot of the challenger banks, because we're facing into a lot of the, it's like I've got a couple of children. My 5-year-old gets to do things a 7-year-old never got to do at her age, because she's got a 7-year-old who's gone before. So I guess I feel sometimes though I have some battles that other people won't have to have, because I've got to go through them. That's just part of the course. You feel sometimes a little bit bruised, but you kind of crack on, don't you? You've got to grow up. But this is not right. 11 times more revenue. I really worry about a bait and switch. I call it misery go-round. A large organisation that has won so many current accounts on its 4, 5, 6 or whatever it's called, is one of the places I recruit the most customers from. I disproportionately win customers from them because the customers say to me, we went there for the money, we come to you for the service. And my concern is the more that we have people robbing the back books to pay the front books, the more that the disconnect grows. I do not offer incentives to join me. I offer service. And my view is simple. If I offer you service, and I win you on service, and I deliver you service, you stay with me for the long term. Bait and switch is a dangerous game and you have to stop it. It distorts markets and also gives an unfair advantage in the fact that a lot of people are being penalised on the back books to create barriers to entry on the front books. And I am fighting that at the moment.
But on that one, sorry.
I'm moving on, but I'm getting blinded down there, I do apologise.
I agree, but you're winning the customers anyway. So why is it a cause that you feel you need to fight?
Because I'm proud of what I do. I want to be proud of being a banker. And I was distraught what happened in 2007, 2008. We should be proud of our industry. How can we be proud of our industry if customers feel as though they're being bait and switched? If you bring a customer in on a rate and then you slash the rate on them and they don't know, we've just created mistrust in the industry again. And we keep saying the most important thing we need to do is create trust in this industry, yet we have a naughty practice. To create trust, you need to build trust. And therefore you need to remove the things that destroy trust. And that's what I'm attacking. Because actually I think I, as a CEO of a bank, have a responsibility in my industry to make sure that we rebuild the trust that we should have. I want my kids to be proud of what I do, not to be apologising for it.
I think that's laudable. Is it a type you can win, given the other players just like?
As a member of the Banking Standards Board, I'm hoping. Don't worry, someone's got it, but fine. Thank you very much. Good, thank you. Honestly, it's fine, thank you. I think we have to drive this change. Because if we don't drive change as an industry, regulators and the British public will, and nobody will. And I think that's where it went wrong in the past. That we assumed that it wasn't our job to, and then we kept going down to the lowest common denominator. We have to be professional in what we do, and we have to challenge those that we don't believe are doing the right things. Because if we don't, then surely we just kind of all run to the bottom.
Yes, but it's that balance between how much of your contribution to the industry is to do an excellent job as Metrobank.
That's where I've got to be.
Tackling,
absolutely,
encouraging your competitors.
My first role is to my colleagues, my customers, and to my shareholders, definitely. But my view is, I want to be proud. The reason why I left RBS to set up Metrobank is because I wanted to do something I could be proud of, and I won't compromise that.
Great. Interested in your thoughts on bank open APIs and whether it'll exaggerate the misery go-around that you described there, or whether there will be other benefits which will outweigh it.
What was that, sorry?
The bank open API.
I think the bank open API will help. I think because competition is good, and actually the misery go-around ultimately gets challenged by people offering different things that people value more. And actually, what I'm seeing at the moment is very interesting if you look at the switching data. The people who are winning the highest numbers are the people who offer incentives in in gross, but they're also the people who lose the most. So the highest recruiter of business on the front end, and I can say it actually, was Halifax, 74,000, but they lost, 78,000, they lost 54,000 in the same quarter. And if you map where those customers go, what we've created with the misery go-around is a large section of the population who stay a year and a day and switch. Stay a year and a day and switch. Stay a year and a day and switch. It's just not healthy. And I think the more competition, I go back to less Me Too and more differential offerings, and I think APIs will help that. I think that'll be a positive thing. The final one that I was going to raise was tax and growth. Buggers. I am not going to be paying dividends. I'm putting all of my money into growth. I need to be profitable to raise capital that I hold against my regulatory growth. The tax will cost me over 50 million quid. That's 50 million quid that if you round up, it's going to take about 2 billion off my lending. Because I wouldn't be paying it away. So what we've done is we've taken money off the banks that are investing in growth to give money to the banks that are going to pay it away in dividends. It's just a bit perverse. And we need to be careful because we're in danger of creating a lot of small banks. And actually what we want is a lot of competition. And therefore what we need to do is make sure we create an environment where people have a level playing field to grow, not just to enter. And that's something that I'm trying to work on as well. I have no issue with paying my tax appropriately, and I do. I have no tax gains going on. But this, John, we have to all pay our way. The country needs us to pay our way. It's less about the specific tax and more about the danger of the myopic view. But now we've got lots of small banks, we have competition, the market's changed, but that's not the case. What we need to do is have, I think, a number of what I call mid-tier banks, 5 to 7% market shares competing with the large banks. You know, we have a concentration here, it's something in the order of 82% in retail and 92% in commercial. It's concentrated in the big five. If you go to France, they're at 72%. If you go to Germany, they're at 62%. If you go to America, they're 48%. We are the most concentrated Western society in banking. That cannot be healthy for competition. And lots of small players does not change that.
Craig, do you think that tax will go back to all of the one? It's over. But do you think the noises about capital might give it back the other way? So
that's my hope. What I'm hoping is that the environment is created to encourage growth in the right way. This move does not encourage growth, and what we need to do, and I don't know if you're at the meeting on the 16th, there's stuff coming up. Sorry, Mark runs a bank as well, so we have chats at different times in different forums. I think we have to create that level playing field to allow the growth, and I'm hoping that we can use this as an example of stifling growth to win some of the battles, to get the goodwill of the government and others to support us elsewhere. But no, I don't think this will change now. I think that this is being played in a political field that has nothing to do with banks. And we need to move away from it and look for where we can gain ground, rather than fight for all more battle.
there's a bigger battle to be won.
There's a bigger battle. I go back to that first slide on with the 11. That's the battleground for me, creating that level playing field. That would remove the issue with this, because then we could create the profits to pay more of that as well, and I'd like to do that. That was me, if that's okay. Any other questions?
I noticed on the league table that actually you weren't top of any of the columns bar one, which was transparency.
Yes.
What are you doing differently to all the others?
On transparency?
Yeah, I think the person that came second was on 36% and you were on 72%.
Well, we don't do things like bait and switching, like I said earlier. We've never changed a variable rate on customers. If we have a savings rate out there and we offer more to our new customers, we put our existing customers on the same rate. You know, it's about trust, it's about creating that trust. So we have our savings promise and our mortgage promise that are absolutely transparent. Our T's and C's have got awards for being transparent, because we use language like this is the legal stuff, and try and make it engaging and human, and because bankers are. You know, we are human. You know, God, when I see my son score a goal, I want to cry. Sometimes do when he then celebrates by running the whole length of the pitch, calling the footballers, and me and his teacher tell him off. Sorry. That was the last weekend. He ran further celebrating the goal than he did in the whole match. A problem of its time, I think we'll call it. So to me, it's about, we've set ourselves out. That's why I have the ceiling floor glass when you go past the stores, because I want people to be able to see in. So I try and use all of those things to be transparent. Because to me, if you have transparency, most issues disappear on contact. And the more people can see, the more transparent they are, the more they trust you and the more you deepen the relationship. And if you can do that, then they become fans and they introduce their friends to you. And that's why we do it. Okay. I'll go at the back and then I'll work forward if that's okay.
Yeah, just a quick question. On the, you talked about conurbations earlier and the trust and having people come into the branches, but as demography changes, people get older, 30 years, we might not be as mobile, as sprightly as we are now perhaps. So older people will want that connection with the branches, but if you have less branches, because you focus on just bigger conurbations, do you not run the risk of alienating the older demographic?
I don't think so. Time will tell. But because of the way people live and work now, I think about my parents. My parents will go for Chinese into Newcastle. They live in Sunderland. My dad goes to the match at Sunderland. They'll go to the Metro Centre for shopping. I think the people, you would expect, hopefully, I expect to be driving at 80, hopefully, and still going and doing things. And actually, as we mature, I think we live longer and live better. So I'd actually say it'll work the other way for us. That we'll be more sprightly in our dotage and more willing to accept, because, you do the vast majority of our biggest channel is mobile. Most used channel I have is mobile, because you can do most of the simple things on there. You want a store full of things that you'll make a special trip for. The days of needing to go to the store to do something basic have gone. And therefore I think people would be willing to make that journey because they've lost their card, or they want to pay cash in, or they want to talk to somebody about a mortgage, or they're a small business who are looking to set up another limited company. But they wouldn't come in to send a faster payment, and they wouldn't come in to send an international payment, and they wouldn't come in as a retail customer to open a savings account, because you can do it online in 3 clicks. That's what, for our existing customers, it's 3 clicks to set up a savings account, 5 clicks to set up a new current account. But you would make a special trip for the things that matter to you, and that's why I think conurbation living would work. Sorry, it wasn't my fault.
I mean, Craig, it's as the gentleman used audible, but one word we've not heard you use is the cost of these service offerings.
Yeah.
I mean, it's all very well, big banks, economies of scale, and the kind of, the effort that you're going, and you certainly throw the market out quite significantly, obviously FG good yesterday. But I mean, how do you manage to get this sort of cost elements?
Sometimes very badly, in truth. So I go back to this model would not have worked if I couldn't set it up as software as a service. If I had all the large fixed costs inherent in the big banks, I could not have made this work and would not be able to drive profit. But I pay on a pay-as-you-grow, so all my software is based on growth. So I pay my Temenos plus my hardware hosting per account. As I grow, I pay more. As I consume more memory, I pay more. So therefore, my cost is largely variable against the growth that I've got. And also, I have stepped down. So as I grow, relatively per growth, I pay less. So if I may click back. Actually, that's the wrong one. As I grow, I pay less per customer, but I pay as I grow. You couldn't build a model in my view if you didn't have software as a service these days. Also, if you think about it, 89% of the customers who walk into my store walk out from the first keystroke to the last keystroke, done. 89% in 30 minutes. Straight through process, no day 2. I don't send them a card, I print it out and give it to them. I don't post them a checkbook, I print it out and give it to them. They set their own PIN number. They sign on the tablet, there's one wet signature on one bit of paper. That's it. Because we copied Apple, one of the lads went to the Apple store a few years ago. So now I have Surface devices on every desk. Everything's done signature on the desktop. No paper, no scanning back. Took 2 minutes out of the front office, 10 minutes out of the back office. Cost me £800 per Surface device. I saved 750 grand on paper. I've got 38 stores, 380 grand. Can I be lazy? I can write that hardware off over 3 years. So it's about 120 grand a year. I make 750 grand saving on paper and toner. Toner is black gold. So it's things like bloody expensive as toner. Forgive me, you know. Sorry, I run the business, we can probably tell that I know things like that. 38 grand a month we pay on printing. Sorry, because I also consume that as a software as a service. I pay per page from printing. So the straight through nature of that, every other bank has to post you a card, post you the PIN number, post you a checkbook, post you a letter telling you that they can confirm you've got the account, and post you a letter telling you how to set up the internet and mobile. 51% of my customers download the mobile app in store while opening the account. Done. 72% of my customers set up the internet in store while opening their account. So when you walk out, I have no day two. I email you the T's and C's. I only give out paper T's and C's to 18% of my customer base. The rest ask for an email. And I email the T's and C's to them. I throw paper away, but I file my emails. So I'll keep the T's and C's because I file it. Saves me a fortune. It's 82p per T and C. So I email and say that 82p on every customer. I save probably 50p per letter on postage. That's £2.50. I also, the Royal Mail will kind of say 92% of all post gets there on time, 96% gets there. That means for two customers, probably at least one of them's going to not get something and another one's going to get it late. So you have a fixed cost. Can you help me set up the internet? I don't know how to do this. I haven't got my card yet. I have none of that because it's all done at point of sale. So to me, you drive your cost base down by fulfillment at point of sale. And I go back to what I said way at the start. This is about tangible delivery at point of sale. If a small business customer wants a POS machine, I give them it across the counter when I open their business account. No waiting 2 weeks. If it breaks, they can pop in, I'll give them a new one. It's fulfillment at point of sale. That's why my stores are so busy, because I can actually do things there. So that's how you drive your cost base down. So I take high cost corner sites, very visible. I only spend 60 grand on advertising though, because they're my advertising. I then have people who can fulfill end to end. There is nothing that can't be done in store. Everything can be done at point of sale. Of course you can go online and phone up and send a letter, but you get it done there and then. No other bank can do that. And that drives down my cost base. And then I consume my software and my hardware as a service, so I only pay as I grow. I don't have to buy expensive bits of tin for one customer. Does that make sense?
That's right, yeah.
So there was another question that
Yeah,
sorry.
down here. You run a bank, but what you talk about is very much a retail model. You're interested in opening hours, creating fans, the great detail that you go through is there, things like costs and delivery costs. So the question is, how do you go about recruiting the right sorts of people to keep that culture going? And then you're a retail banker,
Yeah.
so which of the habits die hardest?
I love detail. So I grew up in a pub. I didn't actually live in a house until I left home. I went to university. I never had a front door key because the pub was always open. It was that type of village. So pit village where people drink when they change shifts. Can I start at the beginning? I don't think banks are banks anymore anyway. So I challenge that premise. Because of the way people live and work now, because when you go to a mobile app, you don't compare a mobile app against the industry competition. You compare it against the best apps you use. So the way technology has moved now, the way we think has broken down these barriers. If I change Curry House if it's too hard to order online, or I might go to a different takeaway. John Lewis's online offering is pretty good, but Argos is better, and I know they'll deliver tangibly better, so I normally go to Argos now at the moment. So I think barriers are breaking down, and people now don't think about what's Metrobank compared to this. They think about what's Metrobank compared to John Lewis's offering or Apple's offering. They're the standards. So we've got to stop thinking of competing with banks, because now we're competing in the way people consume their knowledge against how everybody goes through the handset. So that's the first point to me. I think we need to change how we think about competition and where the benchmarks are, because they have been blown apart. So that's the first point. The second point is, we call it high for attitude and train for skills. I have one current account. I have one instant access savings account. I have 12 product offerings in my store. In my last month at RBS, I had over 2,000 product managers managing 7,000 products. With a 23-year-old kid in a store had to try and flog to somebody. They didn't have a scoop. I train my guys, it takes 6 weeks to train them up before we let them loose in the store. They get 2 days product training. They get 5.5 weeks on how to engage with customers. Because my products are simple. I don't differentiate myself on putting a bit of pink on and a whistle and a feather. I differentiate myself on how I bring it to life for a customer and how I serve them. So we call it high for attitude training for skills. We call our assessment centres M factors. Language is very important. We don't have branches, we have stores. We don't have a contact centre, we have a Maze Direct, because Maze is our values, tender over detail, make everything online, ask if you're not sure, but obsess expectations, share it, and exceed expectations every time. That was 2 bottles of red wine in a pub about 300 yards from the office about 6 years ago. We hire that attitude, but therefore my M factors, we run on a Monday and a Wednesday, 4 till 8, and on a Saturday from 10 till 2. So we only recruit outside of what bankers would think were core hours to prove a point that we're 7 days a week, 8 till 8. It's really important that when we recruit people, they know what we're recruiting for. I do apologise for walking past you all the time. So it's high for attitude training for skills. If you worked for us on the 1st of January 2014, 34% of those people are being promoted by the half year this year because we're growing and we're consuming good people. So we recruit great graduates. 64% of my colleagues are under the age of 30. They come from university. They come, Gaucho, John Lewis, Sainsbury's, some restaurants, pubs, retail stores, because you can train them at base level. Everybody we recruit gets, after 9 months, gets the professional banking qualification. So I train everybody who enters at level 1. When we give them £1,200 more when they pass their first professional qualification as a banker. And that's part of my induction. I've now got a sign-off that we do that ourselves in-house. I think it's really important that we give these people aspirations so that they're proud of being a banker. They get that professional qualification from the Chartered Institute of Bankers. Everybody. It's really important. So high for attitude, training for skills is what we do, definitely. Sorry, Mark. See you later.
Yeah, thanks.
Any other questions, or do you want a break and get another coffee? Sorry.
Yeah. How are we on time? Yeah, well, we've got 20 minutes.
Do you think Sunderland will stay up?
Bloody well hope so. I'm 39 years a season ticket holder, this is not new to me.
Great, fantastic. How do I follow that? It is, you've done very well with the sun in your eyes as well, I must say, I'll sidestep a little. Yeah, thank you for coming to the Gridiron this morning and being with us. I was actually looking around the room and reflecting on the relationships we have with many of you. And Metrobank use the term fans, they're creating fans, and we use the term friends, which I think are very similar and interchangeable. And in fact, if you go on our CRM system, we have this bells and whistles. I don't know how to use it very well. It's actually, the word friends is there. All of you are tagged as friends. And that's the first time I've ever mentioned that to anyone outside of our own business. But hopefully, it tells you a little bit about us and the importance we put towards culture, relationships. And again, looking around the room, pretty much everyone here we've worked with on different levels in different ways. Candidates who are called candidates or talent, clients and candidates. We had a net event last night. We work in different areas. We do permanent, we do interim. So that just was interesting for me to reflect on.